These stablecoin as being a great mean of payment. They are, on and off ramp for crypto. And most of them, they are basically pegged to the dollar. Now, with the MiCA coming into place, what is your kind of like take on the MiCA?
Our interest as a stablecoin is to be regulated in as many jurisdictions as possible. But also, we recently flagged different issues with the MiCA license for stablecoins. Not many know that there are two requirements that are extremely difficult in the MiCA license for stablecoin issuers.
Paolo, it's great to be here with you in Paris and have the opportunity to have a discussion. First of all, I would like to pick your brain on the latest development in the Bitcoin ecosystem. Obviously, we have seen that there's been a lot of experimentation around Bitcoin, especially in the ordinal space. And then there is also, kind of development on the aspect of DeFi on Bitcoin. And obviously, Bitcoin had a great run, has been overperforming all the other assets. So I really wanted to understand, what do you think about Bitcoin as an asset? If it stands as a store of value, or there is much more, and also your thoughts about the experimentation that's been going on in the space.
Yeah, so there is definitely, especially in the last few days, there have been some of the old suggestions and technological changes resurfacing on crypto Twitter about bigger blocks and so on, especially after latest Roger Ver book. Bitcoin definitely is getting a lot of attention now, also thanks to the Bitcoin ETF approval. So there is a lot of action on the price. But what I like about Bitcoin is actually something that not many actually might like. That is the concept of ossification. So the concept of the complexity and the difficulty of changing Bitcoin. I think compared to all the other blockchains, Bitcoin is really, really hard to change. With Ethereum, for example, over the last 6-7 years, Ethereum has a core development team. And the core development team of Ethereum changed the monetary supply, changed the rules that make burning more Ethereum. And so the issue with that is that if you are able to change Ethereum in a way that the monetary supply of Ethereum over time, you can change everything about Ethereum. And you can start adding sensitive layers and so on. So with Bitcoin instead, it's really difficult, right? So the last time any change was actually activated was through a user-activated softcore fork. And SegWit and Taproot were added to Bitcoin. But that was a huge achievement to add a feature or functionality that, in all fairness, was fairly limited. In order to add more complex changes and make Bitcoin potentially being used for many more things, you would need to add more opcodes and more change the scripting language that would anyway cause more potential unseen and unforeseen consequences. So the point about Bitcoin is that it's so hard to change, but that is a great thing, because if it was easier to change, maybe tomorrow a government could say, oh, please, instead of 21 million Bitcoin, please make it 22 or 23 or 30, right? And also make it more sensible, make it more centralized. So when people think about Bitcoin, they usually are scared about this complexity of changing it, but that is exactly what I like. I want to think that although it's far from being perfect, Bitcoin is in a state where today is giving hope and opportunities to people to hold their own wealth, is a store of wealth, and also is a mean of payment when we pair it with layer 2, like network. There is some experimentation like with ordinals on chain, and there are also further experimentations that we're supporting with Bitfinex and Tether with RGB, that is a protocol to create assets on top of the Bitcoin network. So you can issue a stablecoin on top of a Bitcoin network. You could create NFTs on top of a Bitcoin network without to have to pollute the underlying Bitcoin network.
It's interesting. I'm just coming back from NFT NYC, and there are obviously a lot of talks within the Bitcoin community about runes, the new protocol coming up. So it's interesting to see that actually there is a vibrant community and lots of development behind Bitcoin. Now, you talk about stablecoin. and that's where I want to get is obviously we have seen that the dollar has been quite weak over the last few years, and is not getting stronger anyway. And so kind of like people think about could be another reserve currency, or what could be a viable reserve currency. Is Bitcoin a viable reserve currency? And or perhaps we should look at other opportunity, for example, stablecoin backed by gold, or what could be a viable opportunity, a viable option to the dollar as a reserve currency?
So I think you mentioned one that is, I think, great middle ground between a fiat stablecoin and Bitcoin. So the thing with Bitcoin is that no one in the world is ready yet for Bitcoin, right? So especially the older generations have an harder time to trust and understand Bitcoin. Well, understand Bitcoin brings trust, right? So if you understand it, you understand the core mechanisms, then you can trust it, because if you hold money, you want at least to have some trust that you can use that money in the future. If you save money in a certain currency, you want to know that that currency will stay around for a long time. So Bitcoin has to build that trust, although at least to us in the industry is obvious, because it's more trustworthy than people, right? And fiat currency is created by people, managed by people, and to me is the most untrustworthy thing that we can have. Actually, then Bitcoin is the most trustworthy because it's an algorithm, it's math. Math cannot be changed, physics cannot be changed. So that's the beauty of Bitcoin. But the middle ground is a value that and a currency that humanity used for the last 5,000 years. That is gold. And gold is understood by older generations and younger generations. Gold has been used throughout the history of humanity as the currency for all the financial resets of human history. Gold also has some interesting properties when it comes to price stability. If you're familiar with the history, Cicero back in Rome said that with 1 ounce of gold you could buy a fine vest and a nice pair of sandals. And today, with 1 ounce of gold is $2,000, give or take, and you can buy a nice suit and a nice pair of shoes with $2,000. Also, in 1913 was created the Fed in the United States. When the Fed was created, the ratio between 1 ounce of gold and 1 barrel of gold was 27-1. So many years later, dollar has lost enormous potential in purchasing power, but today, the ratio between 1 ounce of gold and 1 barrel of oil is still around 27-1. So it shows that even throughout the last 130 years, the gold has maintained its purchasing power and the dollar not. So we saw there is an interesting website called What the Fuck Happened After 1971. That is the year when Fed pegged the dollar from gold, and you can see basically inflation going up, the purchasing power of people going down. You have some, people complain about, there are some memes talking about your fathers or your parents and your grandparents being able with 1 year salary to purchase a house, purchase a car, and start a family. And today, with the 1 year salary, you cannot do almost anything because, while the earning power of people remain stable, and so salary didn't go up, all the cost of everything in this world went up tenfold.
So, talking about Tether Gold, how we can drive adoption of Tether Gold, for example, a stablecoin pegged by gold?
So we are trying our best to explain why Tether Gold is so important. So on one side, you have the Bitcoin community that, of course, is, again, the Peter Schiff and all the big gold supporters, and so is dismissing gold as anything good, right? So the Bitcoin community, it doesn't appreciate gold, and so on the other side, you have the reality is that people are used to thinking dollars still, right? So, but we are seeing some movement. We are seeing some movement in new gold interest. Right now, gold is at its maximum, so it's around $2,30,000. And I must say that, and unfortunately, there will be a moment when people will understand Tether Gold. And that moment will happen when there will be more instability in this world. Unfortunately, the world is not going towards a more stable situation. From the geopolitical point of view, we are seeing some wars around. But I believe that, I think many believe that also from what you can hear from Germany, talking about forcing conscription again. Same thing happens in Denmark and in a few other countries in Europe. People are feeling unsafer. And the people and governments are expecting turmoil in Europe, but starts in Europe, will not stop to Europe. And so historically, and I'm not, of course, liking that or not, rooting for that, but the issue is that people will rush to a currency and will rush to changes when they see a lot of, unrest and a lot of uncertainty around them. So it's kind of sad, but I think we are going to see that, hence, we are going to see a bigger adoption of tokenized gold.
Yeah, so a renewed interest in stablecoin pegged by gold as the geopolitical situation worsens, and perhaps coming more from emerging market as well. I'm thinking about India, for example. For them, it would be a better choice to move into stablecoin backed by gold, by the dollar. Now, so obviously stablecoin has been a great mean of payment. They are, on and off ramp for crypto. And most of them, they are basically pegged to the dollar. Now, with the MiCA coming into place, what is your approach to that? I mean, what's your thought about it? There are many people talking about we really need different stablecoin, like pegged by the euro, pegged by the pound. What is your kind of like take on the MiCA coming into regulation and perhaps the stablecoin ecosystem developing?
So with Tether, we started work in Bitfinex. We started dialogue with regulators in Europe 2 years ago. Of course, our interest as a stablecoin is to be regulated in as many jurisdictions as possible. But also, we recently flagged different issues with the MiCA license for stablecoins. Not many know that there are two requirements that are extremely difficult in the MiCA license for stablecoin issuers, at least for intelligent stablecoin issuers. The first one is the fact that for a stablecoin as big as Tether, they would require 60% of assets in cash deposits. And people normally would think, of course, what you want to have, right? So you should have cash deposits. The problem with cash deposits is that they are uninsured. So cash deposits finish in the balance sheet of a bank. And if the bank goes belly up, you are drawn into bankruptcy with the bank, right? So you have to fight in the bankruptcy to get assignment of those assets. So that is extremely risky. We have seen in 2023, Silicon Valley Bank almost killed our biggest competitor because our biggest competitor had uninsured cash deposits into the bank. Because in the US, FDIC, that is the federal insurer, insures up to $250,000. In Europe, the European insurance on bank accounts insure to up to 100,000 euros. What is 100,000 euros on billions of a stablecoin? So what is the solution? The solution would be having 100% in European Central Bank treasuries. That is the right solution because treasuries are securities. So if a stablecoin holds treasuries, and treasuries of the European Central Bank are representing the stability of the European Central Bank and the euro as a currency. So you can sell them one-to-one for euros. So in theory, that would be perfect. But there is this weird approach from the European regulator that force stablecoin issuers to keep 60% of the cash deposit uninsured. Also, we know that the banks can lend out up to 90% of their balance sheet. So it means that you are a stablecoin issuer. You deposit 60% of your reserves into a bank account, and then they can lend out 90% of those. So that is crazy because then it means that if there is a redemption of more than 10% to the stablecoin, then you force the bank into bankruptcy because the bank is lending out your reserves. So first of all, you cannot pay out your customer, and the bank will not have these assets because they lend out to someone else. Is the best way to cause a domino effect in the European Union. And also not only that, the MiCA requires stablecoin issuers to keep maximum 10% of their reserves in big banks or up to 5% in small banks. So it means that you have to have 12 banks in euro to keep your reserves. So let's think about it. It's really hard to find one or two banks that are happy onboarding crypto customers. Imagine finding 12. And if you have 12, you are not more resilient. It's more likely that one of these 12 will blow up in the next 2-3 years. So they put you in a situation where if you decide to be regulated in Europe, you are put in a danger your stablecoin. Our stablecoin is used by 300 million people outside of Europe in emerging markets and developing countries. Why we should risk and put all those people at risk for taking more risk on European banks?
Are you excited about any other, beyond MiCA, any other jurisdiction that you think could be positive towards an alternative US dollar stablecoin?
So we're looking at Hong Kong, Singapore, and we are talking and have a really good discussion with Dubai and Abu Dhabi. And we have a great discussion also with El Salvador as a jurisdiction that, of course, is embracing Bitcoin and stable coins. So the interesting aspect of El Salvador is that they don't have a national currency, so they can dare, right? So they accept the Bitcoin as a legal tender, and they are creating a new stablecoin framework. But I think the role of stablecoin is to look as I said, as many jurisdictions as possible.
So going back to banking, you just mentioned about the fact that it's very difficult to get a bank account if you are in crypto. Obviously, banks are not so crypto friendly. What are your thoughts about the future of banks? What kind of like new revenue models they maybe should think about in order to keep up with the pace that the financial industry is moving at technology as well?
So I come from being a developer and having my own startup in London in the traditional financial world. And I can say that the entire technology of the traditional financial world is kept together by rubber bands and chewing gum. So it's something that it has to change. So it feels like the entire technology that sustained the traditional financial world was written 40 years ago and never fixed, never changed. So I think that banking should start embracing crypto custody. So what I think that BlackRock has shown us something interesting. Larry Fink said that they saw a lot of interest in the Bitcoin ETF coming from retail rather than institutions. So it means that actually the Bitcoin ETF helped to people that were not understanding how to buy Bitcoin but wanted to have exposure to Bitcoin into the Bitcoin market. So we can see how actually banks are that embrace crypto and have allowed to be themselves to be an on-ramp for crypto-related products actually is going to be their future. And the ones that are embracing it more sooner and more properly are actually the ones that will capture more the market.
Great. The last question, I wanted to ask you something separate from that. I know that you're passionate about data ownership and content monetization, and you are working on other projects that kind of cover that aspect. Would you like to share some of the work that you have been doing, the company that you have been advising?
Yeah, so there is, I think Bitcoin offers financial freedom, but financial freedom is not that exciting if you don't have freedom of speech. We are seeing in these days what is happening to Elon Musk because of he pushed back on the censorship request from Brazil. So Bitcoin gives you financial freedom, but if you have financial freedom but you cannot say whatever you want, then you are not truly free, right? So if you can imagine that you live in a country and you cannot say something against the government because then they will make your life a living hell. Sure, you have Bitcoin, but why does it matter? Because you are not free anyway. And on vice versa, the beauty is that if you could say whatever you want, but whatever you say can be used against you because you don't have Bitcoin, that is a problem as well. So the financial freedom and freedom of speech has to go in tandem, right? They have to work together. That's the realization we had at Bitfinex and Tether. So we wanted to start building peer-to-peer communication systems that would allow people to build unstoppable applications, as Bitcoin is unstoppable for money, and do it in a way that is built an entire protocol. We worked for 7 years on these new protocols that almost any other company would have to put a token on top of it, right, to monetize the token. In my opinion, the protocols should be free. So people should build technology that is free, and then they could decide to monetize it, right? I'm not against monetization. I'm happy for people to monetize it as long as it's the right way to monetize it and it doesn't impact the performance and the scalability of the protocol. So we wanted to build this protocol to make it extremely scalable, truly unstoppable. So now you have Kit, that is the first product. The chat, of course, is still in beta, is new, but every day we're seeing much more excitement on the usage of Kit. It works everywhere, works even in Dubai, that you cannot in Dubai you cannot make calls on Telegram, but you can make calls on Keaton everywhere in the world, is almost impossible to take it down because it doesn't rely on any centralized infrastructure. I think is probably one of the best pieces of software ever written because is bringing back the ethos of why internet was created, to be point to point, connecting people. And yet in the last 30 years, we only helped the big tech companies in concentrating more and more power in their data centers. So I think Bitfinex and Tether actually stands for this. They stand for even allowing people to achieve financial freedom, but also you can see the thread not only with finance, we do it communications. With communications, we do it with AI through Northern Data. We do with our investments in Northern Data. We do it with Bitcoin mining and renewable energy production. So we envision a future where individuals, companies, communities, and governments and countries should be self-sovereign, right? Right now, today, you have countries that are relying on, and Middle East countries are relying on WhatsApp to, many countries actually in Europe are using WhatsApp to run the country, right? The governments are using WhatsApp to run the country. But WhatsApp is a US-based company. So all these solutions today, both monetary and the communications, are built for the best case scenario. So all the countries are nice to each other and everything works. What if in tomorrow we are going to see the worst case scenario? What if these countries that we are taking the technology from are not going to be nice to each other anymore? So the world needs to start preparing for applications that run locally and they don't need to have data centers far away.
Yeah, it can allow you to keep ownership of the content.
Yes.
I mean, I have a podcast where I know that you want to own the content you create and not somebody can take it down. That leads me to identity. Obviously, in a decentralized world, we should think about identity in a different way. There are different discussions about SSI, about decentralized identity. How do you see all coming together?
Well, identity is a core feature of any peer-to-peer communication system. You want to be able to register and use something without have to leave your email address and phone number. And you want to make sure that your friends can recognize yourself for you, right? So you want to use strong cryptographic proofs in order to create your identity. At the same time, you want to make sure that it's easy to use because otherwise only the nerds will be able to use it. So with Kit, for example, we started with a simple concept. So we were using the same 20-word schemes that powers the ability to create your Bitcoin wallet to create your own identity. So technically, I think the beauty of it is that you can use 24 words. Imagine the beauty of Bitcoin is that you can take, with just 24 words, you can pass any border and bring everything with you. But with Bitcoin, it's only money. But imagine if you could travel any countries and any borders, and with just 24 words, you can get back all your private digital life. I think that is what we are building with Keat and Hole Punch. And I think it's super aligned with the vision of human evolution, but in the right way, with the right of privacy that is a true right that everyone should fight for.
And is in beta that everybody can try, or is a closed beta?
No, it's available on mobile already and desktop. Every 2 weeks we have improvements, so it's growing.
Great, I will check it out. Thank you, Paolo. Thank you so much.
Thank you for your time.